It's Nick McDonald here from liveforextrading.info. I am here with the Goldmaster. I'm here to do an interview on his trading experience and strategy, specifically on the gold pair. Welcome along to the interview, Mr. Goldmaster.
Hello, everyone. Hope all is well.
Yes. I want to kick off with the first question. How long have you been trading?
Wow. Where should we start? I've been trading for about 9 to 10 years now. So obviously going back quite a while. Basically started out, funny enough, my background is not from the financial background. I more or less went to uni in the sports therapy field. So obviously once I left uni, I then started working in a rehabilitation sports injuries center. And it was quite funny. I've always had a passion for money, let's just say, and for obviously understanding how the market worked. But my initial passion was in sports. So I was always a big fan of playing football, tennis, table tennis. I played football at a significant, pretty good level of semi-pro. So following that, and also had a passion for training. So obviously fitness training, resistance, and really trying to improve my health and understand how my body worked. So obviously while I was working in the clinic, funny enough, during lunch, I always used to read books about, Rich Dad, Poor Dad by a gentleman called Robert Kiyosaki. Just really understanding how money really moved. That was more or less in the pastime. That was a bit of a hobby for myself. So it's quite funny when I was, one lunch I was actually reading, and there was a gentleman that I literally walked by because we actually have we did certain like karate and judo classes for young kids. So he actually brought his son for one of the classes. And as he was walking past the small canteen area where I was located reading a book, he actually literally just took a glance and saw that I was reading a book, and he's like, oh wow, that's interesting. So anyway, fast forward a few months, we then started to have a relationship whereby he really gave me a lot of information about understanding how humans work. So, not about the financial markets here, but just understanding about the emotions that we go through as an individual regarding fear, greed, and indecision. They are those are the strong emotions that as humans we go through. So I started to then do some research, with his help about understanding about human behavior, the psychology, the subconsciousness, and everything. Literally got, into a point of like psycho-cybernetics, imagery, painting a picture, laws of attraction, vision boards, so on and so forth. I can speak forever about this. Yeah. But what generally happened following that, I then got to a point where for about 16 months, I was at a level where I had so much information where I thought I could literally fly, in regards to understanding how people and humans work. Then I was like, great, I'm at a level I then went on to do NLP practitioner. So I became a master practitioner in neuro-linguistic programming. And then I was like, great, I've got all this information. Now what? I had so much information. I was like, what's the next step? And then the guy, he worked for Citibank, funny enough. And he wasn't actually a stockbroker there. He worked in the IT department, but he always worked on the trading floor. So he had the ability to obviously, every day he would really communicate, talk with all the traders, understand what was going on the floor. So when there were days when, people were doing extremely well, you can see signs that everyone was kind of had extreme confidence. People were loud, boisterous. But then when there were times when, something was happening in the market where majority of, the traders were getting a bit of a hit, they were on a downside, you can see it was very quiet. There was just that feel of, people were slightly uncomfortable with what was going on. So anyway, he then started to understand the mentality of these traders that were trading, large size here. We're talking about institution funds. And then following that, he then started to then set up his own little trading on a part-time basis. That was before I actually met him. And then after that, he then obviously started to teach me about the psychological side And then I got to a level, like I said, where I was like, what's next? I want more, I want something. And then he gave me the entrance, let's just say, into the global markets. So to cut the long story short, I then started to trade in the Dow Jones first, and then moved on to the S&P 500, trading my own small capital in the evenings when I used to get home from work. And then I was like, wow, this is great. But I still, I didn't have the handle. I always felt that I was always on the outside. I was a retail trader. I wasn't really quite aware of what was going on in the marketplace. And then, funny enough, I said, listen, I want to do something here. So what I actually did is I said, I want to find the best traders in the global markets. And what I mean by the best traders, I don't necessarily mean someone that's trading and making, 700% returns in the market like that. I meant I wanted to find the best risk managers in the market, the best psychologist trader coaches in the marketplace, the best motivational peak performance coaches in the marketplace, the best technical, the best fundamental, if you get what I mean here.
Yeah.
So people that have a unique skill set in every area of the market. And I then wanted to actually ask them questions. I wanted to find out, how do they get to a specific level of success? What did they need to go through? What were their barriers? How did they overcome certain obstacles? So I went on a journey, let's just say, similar journey that you're having right now, Nick.
Yeah.
A journey. And that was a journey I had many years ago. I wanted to find the best. So I basically just literally, people might be asking, how did I do that? Well, I literally just went to Google, went to Google, searched in certain individuals, and I literally contacted them, sent them emails, phoned them. Initially it was difficult because they were like, who's this guy? I may not have time for him. I'm busy. I'm trading large size. You know how it goes.
Yep.
But what was very interesting, Nick, and also to the members, what was very interesting was that the successful individuals, the successful people in the marketplace always had time for someone that wanted to learn. And that really stood out. That was something that I'll never forget. They always had time for someone that really wanted that kind of like took themselves out of the comfort zone, that wanted to learn. So they helped me. They said, listen, Ken, the situation here, we're going to help you. And basically, we conducted an interview with each type of specialist, let's say, people with expertise. And I conducted about half an hour to an hour of interviews, asking them questions. And these were not just general questions. These were questions like, listen, I want to know what was the hardest point of, the trade, or, if it was a technical analysis or fundamental. And they gave me the information, and I used that. And that helped me so much. I think that was the defining moment, on top of my mentor that helped me, that combined with finding out how people, or the success traits that are needed to get there, to be in the top 5% of traders or the elite individuals in the marketplace. So.
Okay, great. So the person that taught you to trade, or how did you actually learn the mechanics of the gold market and how to trade that so successfully?
Yeah, so, the gold market in general was a point where, because obviously following that from that period of 10 years ago to where I am today, I went through a process of not only trading part-time, but then working in the financial markets, working for some investment firms, some small boutique companies. And this is a stockbroker trading a large book for blue chip stocks, so Google, the Apples of the world. But then I wanted more, I wanted more passion. So then I had the opportunity. I was headhunted to partner up with a hedge fund back in the UK. But I then managed a book, did extremely well. But it wasn't gold. It was actually trading the S&P 500. Did well, but one thing is, especially when you're a fund manager, it depends on what market you trade. But I was basically getting to the office at about 6:30, 7 o'clock in the morning, and I was staying, until the close of the US session. So you can imagine I was getting before early European session, and Ciao. And basically getting home, getting back or leaving the office at 10, 11 o'clock at night. And this was GMT time. So the whole day was literally just market. There was no balance. So what I basically said is, listen, you know, the money was fantastic. That wasn't the issue. The money was great, but there was no balance. There's no enjoyment. I didn't have the lifestyle.
Yep.
So I then said, great, you know, I want to have a lifestyle. My girlfriend's based in Vienna, so I moved back to Vienna to then start trading with small capital, work for some small firms here. And then, obviously now working as a portfolio manager for a firm also and trading my own capital. So then I said, listen, you know, I wanted to find something that not purely, but focuses a lot on the psychological side, because that was my background. You know, I wanted to find out something that involves a lot of, not just technical analysis, not just, you know, overbought, oversold or moving average crossovers, you know, lag indicators. I wanted something that moves a lot on emotions, that moves a lot on perception of value. So what I then started to do is create a unique system using the dynamics of the fundamental information, the dynamics of the technical market, and then in combination with psycho-cybernetics, understanding fear and greed. So what I found is there was a system called Market Profile that was devised by a gentleman called Peter Steidemeyer. I don't know if you heard of him before.
No.
He was a trader in the Chicago Board of Trade back in about 1959 for about 20 years. But anyway, he actually saw that there was always a value in the market value of the price between daytime traders and also longer time traders. So that never changed, regardless of the time frame has now evolved to a 24-hour marketplace. But there's always still some form of value in the market. And what I mean by that, in any particular time in the market, especially gold or any marketplace, there's always going to be some form of position, whether it's a net long position or net short positions. And then following that, there's always going to be a time where there's a price that is advantageous for longer term traders and that are also interesting or of value for shorter term traders. So what I then said to myself is, okay, that's interesting. So if I understand about imbalance and balance, so a price that's expensive compared to a price that is cheap, that will enable me to know or have a better idea of when the commercial investors compared to the retail investors are looking to take advantage of the market. Now, to keep things very simple, because I don't want to escalate things here, and I like to keep things simple. I go by the KISS theory, keep it simple, stupid. Yep. I'm sure you have that, Nick.
Yes.
And taking that into consideration, I wanted to combine understanding when there's buyers, i.e. The livestock producers, the grain merchants, the investment bankers, when they're entering into the market compared to when the retail investors, because as we know, 99.9% of the retail investors lose in the market. So I wanted to know what they were doing compared to what the investment bankers were doing. And I wanted to know exactly where and at which price area that the professionals were entering. So that gave me the knowledge of the dynamics combined with that system. And that's something I created over the last few years. And since the inception of my trading, you can clearly see that the results have been pretty significant and alpha, let's just say.
Yep.
Since then.
Agreed. And why is it that you chose gold exclusively?
Gold was because it's the marketplace generally moves on a lot of fundamental information. So, i.e., if we hear certain news such as the non-farm payrolls, unemployment rates, it tends to move in spikes. So there's always a time when there's no fundamental news and the market generally moves in some form of some consolidation. So what you need to understand is that when there's huge fundamental news, the market will move in a spike, which means I'm not really too interested in moving when there's large news because it's 50-50. unless you know what's going on with the Federal Reserve, for example, then you can trade in that direction. But apart from that, the market will move purely based on the value of the market participants. Yes. And that's really one of the only market or asset classes that is really susceptible to understand about the psychological side of the market. And that's the reason why I chose the precious metals, specifically gold. And that it's been working terrific. Regardless of what happens in the market, whether it's positive or negative, for the mood, for risk aversion, for risk appetite, there's always going to have the perception, which basically means that hopefully my system will continue to do very, very well in years to come.
Okay, fantastic. And just looking at your performance over the past 6 months, it appears to be a lot less volatile than earlier in your trading history. I was wondering if you could please explain a little bit why this is.
Yeah, fine. So basically, if you take a look, obviously last 6 months, I've been, there's been a lot of word that's been getting around in the marketplace with what I'm doing, with my current results and, my trading thesis, let's just say. So because of that, obviously then I started to work with as a portfolio manager for asset management licensed regulated firm. Then I started to have a lot of auditors, internal auditors, external auditors, asset management firms, certain banks, law firms that started to really pay more attention, fund of funds, to what I was doing. So one thing they said is, great, your results are phenomenal, but it's very volatile. Obviously there's been a slightly increase in risk that you've been taking. Is there a possibility for looking to give you some huge seed capital to look at decreasing your risk-adjusted profile slightly? So not change your trading strategy, but just slightly decrease the risk that you were taking. So I said, listen, there's no problem. As long as my trading strategy will not change, the issue with decreasing the risk is not a problem. So as you can see over the last few months, the risk has decreased substantially, but also the returns that I've been making has also decreased. So in the first month, I made over 100% returns. The next month, it was over 30% returns. You cannot really sustain those returns because you're just taking too much risk.
Yes. So
one thing with institutional investors, retail investors, they don't want huge risk. So I said, okay, no issues. I'll take down the risk. So as you've seen, the results have generally been hopefully between about 5 to 10%, and the risk has also decreased.
Okay, fantastic. And if someone was to follow your signal, what would be the largest potential loss that they could experience from an individual trade?
Generally, I have my trading plan is purely based on conviction. So I am not a scalp type trader where I enter a position 10 or 20 times per day. I'm more of a trader where we enter 1 to 2 trades per day maximum. So we tend to have some form of a criteria of how to enter position based on the conviction. So if we feel that this trade has a 75% potential profitability, because we don't know whether, even though it has a 75% profitability, we still can take a loss. That's trading.
Yes.
So what we wanted to ensure is that, okay, if we have a 75% profitability, what would the downside risk maximum? So we've scaled back and we want to ensure that a risk on any positions is 10%. That does not mean that every trade will be a 10% loss. Because as you can see, our trades have been taken in general, 2%, 3%, 4% lost. But a worst case scenario will be a 10%. But that may only happen, hopefully once in a lifetime, let's just say. But we like to say, okay, we have risk managers in place. It's not just myself here. I have professional risk managers, part of the team. I have a success coach that's not with me on a day-to-day basis, but I can communicate at any time there's certain things that I want to ask. If I'm going through a massive time of winners, or I'm going through a drawdown, I want to be able to consult someone that's a professional in this area. So we have a strong team, and that helps us to get through certain drawdowns, and also when we're going through a winning streak.
Yeah, excellent. And your monthly profit target moving forward, you touched, I think, mentioned 5 to 10%.
Yes.
Is that correct?
Yeah, that's correct. Yeah, we're generally looking at 5 to 10% as a target. Our aim is not really to push it to try and look for 2025, because when you start getting into that range, then the risk also increases.
Understood.
So as I alluded to earlier, we're taking slightly lower risk, which means that the returns will be generally about 5 to 10%.
Excellent. And when you do hit a series of losers and you do inevitably drop into drawdown, how do you maintain a cool head during this period?
Good question. I think one important trait for any successful traders is how they actually respond and recover from a drawdown. Because anyone can make profit, but how do you recover? And I've gone through. If you look back in my history, I've had a few drawdowns, and I've recovered from those drawdowns. And generally, what I do is I tend to if there's a drawdown, there's two things will tend to happen. Either you continue trading, or you say take some time away. What I have something called a log sheet. So I have an evaluation sheet. By every single trade I enter, I take a note of where I entered the position, why I entered the trade, and also an evaluation after the trade. So whether it's a profit or a loss, I say, why did I enter the trade? What improvements can I make? So if I'm going through a drawdown, I'll literally say, okay, the drawdown of, let's say, for example, 5 trades have occurred because of what? Number one, have I followed my plan? If I have, then number 2, what has occurred in the marketplace with gold that may have deviated and why I've taken these losses? So I look at areas to improve, and if I haven't followed my plan, then I know instantly, okay, I haven't checked off my list. Number 2, I haven't stuck to my risk management potentially. Number 3, I haven't stuck to my technical fundamental plan. Fortunately, with these areas, we stick to our plan. That's why we have a strong team. So how I what I go through is I spend a lot of time in improving my mindset. I spend a lot of time in going over certain information, i.e. traders, my mentor, my trader coach. I speak to her and I say, these issues I'm having, what areas can I improve? And that helps me a lot. So that's how I recover from these situations.
Excellent. I appreciate your time, the Goldmaster. It's been very informative, and I look forward to chatting with you in the trading room and trading with you for many months and years to come.
Yeah, absolutely fantastic. Enjoy myself, and you have a great members in the community, and hopefully we'll continue to increase the returns for everyone.
Absolutely.
Absolutely fantastic. Thanks very much for your time.
Yeah, thank you.